මෙහෙට දැන් දාලා තිබු slide එක.
මේක නේද?
ඔව් ඔව්.
profit from trade එකේ ඉන්නේ.
ඔව් ඔව්. right. Right, good evening. Then last 5 sessions you have learned some source of income. Today I am going to explain the one other source of income, profit from trade. Before that, I am Rangalla, one senior commissioner of the Department of Inland Tax Department. I have more than 29 years experience in taxation. Then both theoretical and I have the knowledge of theoretical part and also practical part of the taxation. Before we go into this subject, Ms. Amila Rajapaksa is the first part of this subject. Again, I am going to emphasize that the subject of taxation is a part of the fiscal policy. And also the fiscal policy is the part of the subject of public finance. The public finance is subject of economics. Before the subject of economics was evolved, the subject was social science. Then taxes, subject of tax matters discussed under social science. Likewise, the subject of social science was evolved over the period, and now taxation has become a separate subject. All the universities of the world and all the professional institutions, now this subject is taught. That is become the subject taxation become part and parcel of all the subject combination of the any degree program, degree and even master. Now it has become the master of degree program. Then lot of research have been done under the subject for a PhD doctoral studies purpose. Then you all must have your theoretical part of the subject also. If someone need to do a research on the subject taxation, you have to take some part of this subject. Then then we must have some sort of theoretical knowledge of this subject. Then normally when we talk about subject of taxation, normally all the students used to compute the tax liability of the person or the individual or the company or participant all. But beyond that, then in policy makers of this country and all other policymakers of all other countries, before they make any tax policy, they must have some knowledge of taxes. Once the tax is imposed, how it is passed to consumer, it is bear by the taxpayer, and likewise this subject is this subject is though we think it is simple, the subject is very subject is very comprehensive, and it expanded a lot of areas. Then in this subject today we are learning under the embassy degree program. Only we are limited to learn some areas of this taxation. Always the government and all the students, all the policymakers, and some policymakers think the tax is only for a collection of revenue for the government. But that is not the case. In some cases, the country need to encourage the foreign investors, and also same time country need to discourage some consumptions of goods. Then on that situation also the tax policy is used by the policy makers. You know, very recently, one minister said the sugar prices is increased and also put some VAT. Why? The reason the government need to discourage the sugar consumption. Then disease like diabetes is going low, and same time if the government need to discourage the alcohol consumption, government can put more taxes on the alcohol and the tobacco. It is happening in each and every country coming to force, they immediately they impose taxes to the alcohol and the tobacco. When the small fellow consumer cigarettes say paying 100 rupees, that means he is paying 80 rupees for the government by way of taxes, direct and indirect taxes. That is the way of taxes. If someone need to ascertain when the prices is increased, who is bear the tax incidence of this incidence, whether it is bared by the consumer or the taxpayer, then research has been done, it has been measured. Likewise, then the subject it is comprehensive, but anyway in this subject we only learn here how to compute the tax liabilities of an individual, company, partnership, club, and also we are going to learn the scope of the value add tax and NBT and ESC. ESC means economic service charges. In addition to that, we learn the tax part, administration part of the taxation. Right. Before income tax in Sri Lanka, even our king's time also collected taxes. Though they have not properly categorized the source of income, they also collect the taxes on agriculture, taxes of industries, taxes of irrigation, roads, even import and export. If we learn our history, there are ports called Godawaya, Mahatitha, then now these days called is Hambantota and the Mannarama. In that point, once the in Sri Lanka those days, the very valuable pearl were exported. On that point, export duty was collected. On other countries, they bought some clothes and to Sri Lanka. Then in that point, taxes were collected. Like today, the custom collect custom duties. The same way it has been evolved today. Now, Department of Custom collect the custom duties at the point of custom. That means the imports of ports and the airports. The Department of Inland Revenue collect income tax, value added tax, ESC, NBT, all other taxes. For that purpose, our Madam Amila Rajapaksa taught you the source of income. Now you know there are some source of income, interest, income, rent, income, likewise. Now today we are going to ascertain learn how to ascertain the profit from trade. Then in Sri Lanka, the income tax is imposed under the provisions of the Inland Act number 10 of 2006. Say, if the Department of Inland officers visit the one place and they demand the owner of the business, show your books of accounts, tell me your daily sales, tell you value of your stock, and also raise question, are you paying taxes or not? Likewise, and same way, the different in this country, lot of people have various source of income and derived large amount of income through these sources. Then we need to who is liable to pay and on what way he should pay taxes, how on what way government collect taxes. For that purpose we need some law. The law is for subject for taxation, for a public finance, or full powers are vested to the parliaments. Only parliament can pass act to collect taxes. Then the parliament has passed the act called Inland Act number 10 of 2006. Under this act, powers have been vested to Commissioner General of Inland Revenue to collect taxes. when commissioner is going to collect taxes, she has to decide from whom tax is collected. Then, how to compute on what range of income to be considered for the collection of taxes. All the people of this country have some income, even labor. He is also earning for 1,000 rupees per day, say the averagely. That means he also having some income. Even farmer, he is not daily receiving income, but he also half yearly or the yearly annually he gets some income. Even fisherman gets some income through his profession. Then some people are doing business and they make profits. Same way, some people have the excess monies invested in banks and they derive interest from their deposit. Deposit interest derived from so many instruments: fixed deposits, treasury bill, treasury bonds, debentures. Like that, there are so many deposit instruments. Through that instrument, people are receiving interest. Same way, some people employed in the public sector or the government sector, then they are paid, when they provided their service, they are paid some remuneration. That in taxation we call, in general we call, that is their employment income. Then the employment income. Some people, they have excess money, they are investing in shares, they receive the dividend. Some have excess properties, lands or the buildings or the houses, then they giving it out in rent and they are receiving rent income. Likewise, some people doing some businesses. There are several organized structures in Sri Lanka do the business. Take some individual, then he start a business, then we say that a business is a proprietorship. The one or two people or more than two people get together and start a business and make a profit, then we call that is a partnership business. That is another structure of business. The same way, some people, they organize the business as a limited liability company for that purpose. There are some governing law, Companies Act. Then under the Companies Act, they register the business and they are doing business. Then separate. Then in the corporate taxation, then company is another legal entity and shareholder become other legal entity. Then as shareholders, they receive the dividend. As a company, they make some profit. Then they have to pay profit from their tax. Then I want to highlight here is that now the different persons, the act identify the word of person. The word of person include individual or the company. But according to current law, even partnership include also come to the meaning of the person. Right? Now accordingly, now different persons are doing business under the different organization structures. But anyway they are doing the same. Sometimes they are doing same business. Take some textile shop. Say if you the Tushar textile, some owner will be a M.A. Tushar, then that is a textile proprietorship business. There are some case, Ram Brothers, there may be two owners, but still they are doing the textile business. But anyway, they are doing the business under the partnerships. In individual, in the proprietorship case, the proprietors enjoy the whole profit of the business. In partnership, profits has to be shared between the partners. But same way, in the same street, there may be a company called Impex Private Limited or the some name, putting some name, Tushar Textile Private Limited. But still they also doing the textile business, but different organization structures. But anyway, but if you are going to analyze the nature of the transaction, all the three businesses, they need the business premises, they need employees, they need furniture and fittings, they need first to sell the goods, they have to purchase some goods, material. Then sales are in all these business. The customer does know about the organized structure of this textile. They enter the shops and what is the good shop and what are the more fashions available. They enter into that shops and they make shops. But same type of expenditure are in all these type of organized structures. But ultimately, their main motive is make a profit through doing a business. Right. Then, as I explained, the Inland Act, Section 3, identify different source of income. The first section is Section 3A. Section 3A deals with the profit from trade, profession or vocation. Then other B, C, D, E and F, these sections deal with the one rent income, employment income, dividend, interest and royalty and rent, and also in some cases there are some other source of, in some cases source of income cannot be categorized. Then all these profits come to under the all source of income. The purpose of income taxation, whether it is a rent or dividend, interest or the trade profit or the royalty income, normally we call profit and income. Then profit and income is consists of so many sources. Now we have all learned what. Then same way, the section 3 describe the source of income. Now we know section 3 describe the source of income. Now I am also paying tax, but not when I receive the salary, department deduct the PAYE taxes. That means I am paying taxes. If you are a public sector or the public government sector employer, if the government is deducted taxes, that means you are paying taxes to your employment income. Now there are some rules. The only section 3 describe the source of income. There are other sections of the Inland Act number 10 of 2006 describe how to compute the source of income. Right. Now we have already learned that once the employment income is ascertained, cash and non-cash benefit are taken into consideration. Even medical bill, if the employer paid telephone bill, 50% of the bill is treated as a benefit for the employment. The Act describes how to compute the employment income for the purpose of taxation. As you learn, in some employers providing house free of charge for employees, then it is accrued as a benefit, but we value the benefits and assess as the employment income. Likewise, interest. Now profit from trade also has to be ascertained. Say that if the one business fellow, they from morning to evening they sell all the goods and collect say the 100,000, that is his gross turnover, no, that is gross sales, but that is not the profit. Immediately some purchase cost is involved. In addition to that, the employee's salaries and lot of expenditures are involved. Then all the expenditures have to be deducted from the sales value. Then we compute the profit of the business. In average person, he can immediately compute this profit. For in accountancy, then we learn how to compute the profit from the business. For Inland Act, normally in general sense we are called business, trade, business, then vyapara, well and them like that. But Inland Act use two words, trade and business. Right? All these words have been defined in the Inland Act. That means they have a meaning for the each word. Right. Then again, the Commissioner General of Illinois administers the Illinois Act. For that purpose, Commissioner General has to decide from whom tax is charged, on what income. Say, in some cases, if even the beggar, he also begin and collect some income end of the day. In some cases, some people are receiving gift or the donation, but still it is also nature of some income. But all the incomes are not chargeable under the tax. The Tax Act describes on what income is charged and also who is chargeable. Now we know that if someone has employees under the employer and receiving employment income, he is chargeable under the Inland Act. Why? The chargeable section described for the purpose of this act, means the Inland Act, profit and income or profit or income means income chargeable with tax. Say that section 3, they elaborate. These are very, very important words. Purpose of this act, profit and income or profit or income or profit or income means income chargeable with tax. All the incomes are not taxed, right? Here, now the question arises, then why we are learning the way that how to ascertain profit from trade under subject of taxation. As average accounting students, normally he knows how to compute the business profit. We are learning the subject of accountancy. But there are some differences. Right? Right. Now, as I explained, there are different type of organizing structures. Take the listed companies. Some companies have been listed in the Colombo Stock Exchange. So, then there are some regulatory requirements. They have to submit annual and half yearly accounts for the Colombo Stock Exchange. Then if it is so, that the regulatory requirement, then they have to prepare the accounts. Right? In some, if it is a part, the end of the day or the end of the year or the end of the month, partners have to divide the profit among the partners. Then they have to ascertain the profit from the partnership business. Then that means then profit has to be ascertained. Before I approach the subject, we must know the background of this profit, what is profit and why profit is ascertained. Then the Illinois Act again say any tax person subject to pay taxes, he has to furnish statement of accounts. Then the subject of statement accounts have been specified in the Illinois Act. Now again, they says auditor's report to be furnished along with the return of income. In taxation, return means the badu wartawa. Return of income means adayam badu warta. This is very, very important. Return of value-added tax means ekatugala age matu badu wartawa. Return of nation building tax means ජාතිය ගොඩනැගීමේ බදු පිළිබඳ වාර්තාව. We are not saying return of income tax. Normally we say return of income. Return means බදු වාර්තාව. Then under 107 of the 11 Act, the word of profit has been defined, and also the word of profit and income has been defined in section 217 also. We must learn the mechanism of the act. The 11th Act has more than 220. Section 217 define the word definition of the word. The word profit and income has been defined in the 11th Act. Then profit and income has been defined. Profit and income ascertained in accordance with the provision of this act. That is simply says the same way. The section 107 deal with the submit of audited accounts and audit statement accounts and the audit reports and some schedules and certificates. Then the 107 also define the word of profit. Then word of profit has been defined as profit is computed in accordance with the accepted commercial principle of accountancy. Then profit means profit computed in accordance with the accepted principle of the commercial accountancy. Now we have to find out what are the principles of the commercial accountancy. Then we all know in Sri Lanka, Chartered Institute of Sri Lanka has published some accounting standard. That account standard have been published in the gazettes. Then take the business of lease. What is the nature of the recognition of income is the interest income. In lease income, though the leasing companies collect the capital lease rental consists of two components. One is the capital, another one the interest. But profit is the accounts are prepared considering the interest income. The banks, their main source is consists from sending, lending loans or the customer add-on. They are deriving interest. Their gross income is the interest, and also they are paying interest for the deposit. Then that is their borrowing cost. Then that is their main expenditure. Then different type of business identify their income in different ways. The leasing companies, they identify their income as interest income. The banks, gross income is interest. But take the normal wholesale retail business, their gross income is sales value. Normally we take in the turnover. There are some plantation companies. Their expenditure pattern is different. Say if the tea plantation, to get the harvest, it will take 5-6 years. If it is a rubber plantation, even coconut plantation, it will take many years to get the harvest. In initial period, only expenditure are involved. Then, as I said, likewise, take some construction business. Some construction take more than 1 or 2 years. The one highway to complete one highway, it takes 2-3 years. But anyway, the income has to be ascertained for the year. The income tax is charged in annually. The period computed starting from 1st April to 31st March of next year. That is now we call it year of assessment. In some cases, accounts are prepared in calendar year. Calendar year means starting 1st of January to 31st December. But anyway, they are prepared. But you all know there are some, the period is 12. Normally in all over the world, accounts are prepared on annual basis, but normally they are preparing for a monthly basis, quarterly basis, on the 6 yearly basis for a tax purpose. Normally taxes accounts prepared on annual basis. For a purpose of taxation, year is counted from 1st April to 31st March of next year. Then again when you come to subject, the profit from trade. Now Act says profit to be ascertained in accordance with the accepted principle of the commercial accounts. If it is so, now in Sri Lanka we have to follow the accounting standard established by the established and gazetted in by the Institute of Chartered Account of Sri Lanka. For it, consider the nature of business, they have introduced different type of structure for the with the profit from trade. On that basis, profit to be ascertained the first, right? Then in that cases, normally now in addition to that, very recently there are some other to the more transparency of the business and also the protection of the security of the other stakeholders. Now principles of international finance also come into existence. Now we have the Sri Lanka and Institute of Chartered Accountants of Sri Lanka also they also now consider the regulations of the international finance. They also follow the international financial regulation. Now they have interest for a Sri Lankan accounting system. Now that means if you see some set of accounts prepared by one company or the business, that accounts have been prepared in accordance to compliance with the regulation of the international financials and also the accounting standard published by the Chartered Institute of Sri Lanka. Now any question about the preparation of accounts by the companies, even for that purpose they consider the way of the expenditure pattern, revenue, or the principle of capital and revenue. Capital and are not charged for the P&L, all revenue expenditures are charged for the P&L. The same way there are some for the way of making some provisions, competition, stocks, assess valuation. Now international finance regulation given some guideline. We all are incorporated with our standard. Now end of the year accounts to be value for the market value, consider the market value and the cost of and all the whichever is the lower value. Now we know the how to ascertain the profit from a business in normal course of scenarios. Right. Now once that profit is ascertained for the purpose income taxation, the account has to be adjusted. The Inland Revenue Act says, then as we learn, for employment income, though the employer receive cash remuneration of the benefit, we consider other benefits for the purpose of taxation. We adjust the employment income, adding the employment or other benefits. Likewise, the Inland Revenue Act Section 25 and Section 26 describes some allowable and disallowable expenditure for the purpose of taxation. Now all this, the principle of commercial accountancy allowed the expenditure, all the revenue expenditure are allowed, capital expenditure are not allowed. Up to some extent the way they have regulated, stated provisions also allowed to deduct. But the Inland Revenue Act for the purpose of taxation to ascertain the profit from trade or the business, then two sections are involved. These two sections describe Section 25 the allowable deduction. All the deductions are allowable under the normal commercial practice of the accountancy. The section 25. Say these words are very, very important. Section 25, these are the words of the Act. Section 25, subject to the provisions of section 2 and 4, there shall be deduct for the purpose ascertaining the profit or income of any person from any source, all outgoing and expenses incurred by each person in the production of their include some expenditure is specified in section. This is the section very, very clearly say any outgoing and expenses incurred, very, very important two terms for the purpose of production of income. Say, take an individual business. If we charge his house expenditure, his private expenditure, these expenditures are not for the production of income. Say individual business, he charges rupees of his children. Is that a business expenditure? That is not the business. School expenditure is not for the business expenditure. That is his private expenses. Then that's why I say any income, any expense incurred by each person in the production thereof including. That means if any expenditure or incurred for the production of the income are allowed, but including all this, right? Then section 25 does not describe all the expenditure. That section say you charge any expenditure incurred or for the production income for the purpose of ascertaining the profit. No any question. But including this following expenditure. Say, before I go into further, say, in normal commercial practice of the accountancy, for the purpose of ascertaining the profit, we do not charge the capital expenditure, only for a revenue expenditure. But this section 25 says allowed to charge, deduct some capital expenditure also. The accounting standard for a depreciation, they consider the economic usage of the that is we call the usage period of the particular assets. Consider usage period, depreciation rate have been fixed. Say for a building, normally in commercial practice, they normally in commercial practice they allowed of 10%. For a land, they are not charging depreciation allowance. For a motor vehicle, 25% or 25%, that is depending on their company policy. But the Inland Act section 25 says you buy any capital assets, you can charge, but depreciation is not allowed. Depreciation allowances is allowed. But normally, for the purpose of ascertaining profit in accordance with the commercial accountancy, they charge different rates applied. But the Inland Act says, you buy some fixed assets, claim the capital allowances as rate specified by the Act. Though it is a different allowances, still we are allowing the depreciation, but the rate to be applied in according to the Inland Act. The Act says to claim 100% for the software developments, or the 200%, the company can claim. But in normal commercial accountancy, software development, they are not charging 100% of depreciation. They will normally charge 25% or 20%. Even hardware they charge 25%. Right. Likewise, depreciation allowance, then the rate are specified in the Act. The each and every budget are presented to the Parliament. The Minister of Finance, considering the economy of this country and considering the how to increase the capital formation of this country, they encourage the investors go for more and more invest and purchase more and more assets. For that to encourage, they are giving more allowances for the capital assets. Say if we say, then again I am going to highlight here accounts to be prepared in accordance with the commercial principle of accountancy. Department also accepted the accounts, but considering the requirement of section 25 and section 26 we describe in another slides, that section say these entries are not allowed to deduct. For the purpose of the commercial accountancy, expenditure are allowed to deduct. Say that any advertisement expenditure is allowable deduction for the ascertain the profit from trade. That is a business expenditure. But Act says, the Illinois Act section 26 says, no, only 25% of the capital advertisement is allowed. Likewise, and same entertainment expenditure may be a business expenditure. But Illinois Act says, no, that it is not allowed. Likewise, today we need to first learn that some expenditures are especially allowed by section 25 and some expenditures are not allowed under section 26. That means section 25 says the allowable and section 26 describes the disallowable deductions. Say the repair expense. Normally that means if the business is performed under big business, the time repairs has to be done. If you go to any textile business, each and every day they are make some repair, they are adding something, right? This is normal. And the debts amounts become bad, that may all the debtors become the bad, then it is not collectible, then there will be a business expenditure. If the debtors become the bad, the business is not in the position to collect it, that is be a business expenditure. They say if some employees take a loan, he leave the business employment, then it is not collectible. That is not the business expenditure. It is become a bad, that type of expenditures are not allowed, right? Interest paid and paid the Provincial Council means before 2011 the Sri Lanka in whole turnover tax was collected by the Provincial Council for the business of wholesales and retail. Then Provincial Council collect the turnover tax. Then that tax was allowed as a deduction. Travelling expenditure within the Sri Lanka. Say section 25 says travelling expenditure within Sri Lanka. Then they give the some negative opinions. If it is the outside Sri Lanka, that is not allowed. If you are telling the word that travelling expenditure within Sri Lanka means, if it is incurred for the outside travelling, then not deducted by it. Expenditure for cultivation of animal husbandry. These are the normal business expenditure, training expenses. EPF in all business, the one part is collected from the employee and the employer also contributes from part. Then employer contribution also allowed to charge for the P&L. Gratuity refunds, quotation, these are very specified in the section 25. But any other expenditure incurred for the production, here the section 25 does not specify the purchase of goods value, cost of sales. There is a normal business, that means any expenditure or the outgoing incurred for the production with the here normally section 25 does not describe the closing stock or the opening stock or the purchase of goods or the returns of goods, those are not here described. All the expenditure are allowable deduction. Royalty or ground rent. Right. Here I have stated some important sections of the section, some important part of the section 25. Say, now, here in red I have highlighted skill development training and brand promotion for export of product manufactured in Sri Lanka. 300%. They say if only for a particular purpose, they incurred 100,000, but excess you charge 300%. Now what is the purpose of this one? The government need more training, skill development training. The business of this vocational training business are encouraged to train more and more people. Then this become the assets for the country. Then say the very recent amendments. That's why I earlier explained each and every budget. The Minister of Finance announced this type of proposals through the budget. Now, here the with effect from 1st April 2005. Now, I think you have all learned the income returns return income is furnished, or the income tax period is normal income tax collection period is means we call that is the year of assessment. That means income tax is collected year of assessment basis. Year of assessment basis means year of assessment is started 1st April of year and end in the 31st March of next year. Then always we take 2 years for the 1 year of assessment. Then for the year of assessment 15 and 16, then 8 months for the calendar year 2015 and the 3 month first 3 months of the calendar year 2016. That's why we call 2015 and 16. This amendment come into then our year of assessment is 15 and 16. If they say in one company they spend 100,000 for their skill development training for on July 15, then you can charge 100,000 as expenditure. But in accounts he paid only the 100,000. He can adjust account claiming other 200%. Likewise, we learn how to compute the. I show you how to compute the profit from trade and all. Only for your general knowledge, this part. Right, the disallowable expenditure. Okay. This research expenditure 300%. Now, before that, we allowed only for 200. Again, budget 1 year, Minister of Finance announced, no, you do the research more, you can claim 300%. Normally we call research, and normally in the subject we call R&D in fiscal policy, or the investment subjects we call R&D. Then you must know now this word, this is expenditure. This is much value for these words. Thousands of research have been done on this subject. How research and expenditure incurred by the company, or how the policy makers encourage research and developments. All over the country, all the policy makers of their countries, respective countries, they encourage the business people to make more and more research to promote. Otherwise, then they claim in 300%, they can reduce their profitability for the purpose of taxation. Their profit, normally if they amount incurred discharge, they can make some profits, and but when they come to the profit for taxation, they can reduce, and they can reduce their tax payable by claiming that 300%. Now I am going to tell you how this principle was evolved to Sri Lankan tax era now. Say, we all have learned, there are organizations called World Trade Organization. There is Sri Lanka also the signature of the WTO, World Trade Organization. There are other organizations called Organization for General, the world, the WTO have some other concept for they are entering some agreements. That agreements we call, member countries enter some agreement for general agreements for the trade and tariff, or the World Trade Organization facilitates member countries to enter into trade agreement. Right? They specify the criteria. Under this general agreement for trade and tariff, the member countries are they have to follow that. If any country has done research, any person done research and found some new thing, he can pay. Right? If someone has done some research and patent it, others can't produce that goods or the service. Right? The person who did are given full authority to make the goods for 15 years. Then others can't follow that. Then all the member countries has to follow that rule. One fine example is you all know the LG door calling. The LG manufacturing refrigerators, they paid cooling. Door cooling. They patent their rights, and all other refrigerators was not allowed to manufacture. Then lot of people start to do. They can. Then if going likewise, they give more and more encouragement for the research. Then lot of people engage in the research and their new findings come. The benefit come to all the societies. You see, all these days, all the pharmaceutical manufacturers, they are doing research for the find some new medicines for the diabetes, to reduce the cholesterol, for a lot of things. For a lot of diseases, they are doing research to for some finding some new medicines. Reduce the cost of the medicine and also the quantity of the medicines. For that purpose, they are doing research. All the motor vehicle companies in the world, they are doing so many research. Likewise, to encourage the research, all the encourage their investors or their business people to make more research. Following since Sri Lanka also the member countries also follow the conditions of the WTO, and we also allowing through our tax mechanism, we are allowing 300%. Even EDB in Sri Lankan government also providing some benefit, the facilities for the investors to make more research. Right? In the research, even capital expenditure also allowed. Say that for some, in some medical research, they need some laboratory instruments, no? They have to purchase some instrument, lab instrument. Then that is a capital expenditure. Though it is a capital expenditure, such type of expenditure are allowed. Section 25 sometimes says, irrespective of the nature of capital, if the section stays allowed, the company, once the profit is saying that type of expense can be charged for the P&L, right? For a preparation of accounts in accordance with commercial accountancy, normally that type of capital expenditure are not charged. But when we prepare, adjust the tax accounts, they can charge the capital expenditure also. Right, the section 20 R area, section 26(1), for the purpose ascertains the profit and income of any person from any source, no deductions shall be allowed in respect of. There are lot of expenditures as specified in the section. One is the private expenses. As I said, the sons, say the one company director, he has spent 500,000 for his child's birthday party in a hotel. He he give the bills to the accountant to pay the hotel bill. The account pay the hotel bill and charge at the entertainment show, other headings. But though it is charged as expenditure, but that is not the business expenditure. That type of private expenditure are not allowed, right? Now these are the, the expenses traveling outside Sri Lanka, expenses related to promotion of goods or service for export, right? Now section 25 says traveling expenses incurred within the Sri Lanka for a business. For in this here says traveling expenses are not allowed. It says if any traveling expenditure incurred for the promote the export of goods or services, then that expenditure are allowed. So expenditure related to promotion of goods or services for export, right? We are right. I studied Sri Lanka. If the foreign traveling expenditure incurred, say apparel manufacturer, he manufactures all these garments for export, then he has to visit his buyers and he has to promote his goods, items. For that purpose, he has to have to participate for the participate for export, and then they have to visit the country. They have to negotiate business with their clients. Then their travel expenditure are incurred. If the foreign travel expenditure is related to export of goods or services, provided of services, then foreign travel expenditure can be claimed. Now very recently, all other cases, and also for the purpose of promote the tourism, say in Sri Lanka now these days we are always promoting the industry of tourism. The tourists come from the other countries. Then in Sri Lanka, hotel people have to go to abroad and promote the people. Then they have to visit other countries and they are tourist agent of these other countries. Especially these days in Sri Lanka, a lot of hotel and tourist agents going to China to bring the more Chinese people to Sri Lanka. Now in China, there is a very, very developed country. Lot of Chinese are visiting all over the world. Now what Sri Lanka also try to get some portion of this tourists to Sri Lanka. Now lot of Sri Lankan hotel people and tourist agents visit to China and promote the towards business. Then they have incurred the traveling expenditure. That type expenditure. Then if the foreign travel expenditure is related to promote tourism, then expenditure is allowed. Now we learned 3 items: promotion of export of good or the providing services or the promoter of tourism industry. Very recently, but in other cases also you have, in some cases, some imports also need to visit the country for import the goods. First they have to negotiate the business. For that purpose, even importers, they need to visit their supply. They select the items. They also visit the places and they have to select the lowest price and the quality goods. Then they have to visit the country. Even import business, some importers needs to visit the outside the foreign country. Then consider those facts. Now foreign traveling expenditure incurred for the even import business. Expenditure allowed up to some restriction. The expenditure limited to 2% of the previous year profit. Say in case of traveling expenditure for the purpose of export of goods or the provider of service for export, no any limitation. But if in other cases, say in case of allowed 2% of the profit of the previous year. Say if someone has incurred the foreign travel for export business, then 2% comes only for 100,000. Then on that day we have to compute the 2% of the previous year profit. But amount should not be limited to 2% of the previous year profit. If he has spent more than 2% of the previous year profit, that part is not allowed. Then we learn how to compute the profit in later stage. The primary this is the way of some restriction for the foreign traveling deduction. On foreign traveling expenditure is allowed to deduct in case of exports and providing service for export and also the promotion of tourism. But all other cases, amount is 2% of the previous year profit. Very simple limitation. Say other one is management piece 200. Why we see it is especially specified disallowable. Say in Sri Lanka you all learn there are some group of companies consist of more than 50 companies. One company is called holding company or the management company. Take the Jonke's Holding, the number one business in the Sri Lanka, the one blue chip. They have more than 50 subsidiary companies. Take Haley's, more than 70 companies in the Haley's group. But in this business organization, for the easy business administration, the managements are done by management company. For that purpose, say if some subsidiary need the accountant, the holding company advertise to recruit the accountant. All the expenditure charged by incurred by the holding company, they recruit the people when appointed the subsidiary company. And also lot of business negotiation done by the management company. Promotion works are done by the management company. There are a lot of management activities are done by the management company. So in some cases there are, say one subsidiary company make a huge profit. The holding company has a loss, but paying management fees, high amount of management fees by a subsidiary company, they can reduce the liability, and holding company loss can be reduced. Right? If the huge losses are in the holding company, charging more management fees does not affect the profitability of the current year. They can reduce their losses and the subsidiary company reduce their profitability. We learned in how it works. On that way, the company has tried to manipulate their taxability through the management fees. Say in some cases, without some companies are not engaged in the management, they charge management fees, and one company charge as management fees and other company shows as the management fees income. The two companies are taxing different rates. The more management fees charged by one company and apply lesser rate, they can reduce their tax payable. Likewise, since there are some manipulation was incurred, now through the mechanism of management fees, now they are not allowed to reduce their profitability and accordingly reduce their tax payable. That is the limitation. But you all must understand, in Sri Lanka, there are company called plantation companies and the hotels. Take hotels. There are a lot of hotels, city hotels, beach hotel. There are some and the resort. If you take the experience space, they have Kandalam, the resort hotel in the Sigiriya, Kandalam, the beach hotel in the down south. In the Colombo also they have hotel, city hotels. If we take the Hales, the city hotels, the Kingsbury, the Pasikuda, they are Amaya Lake in again the Kandalam area, beach hotels, city hotels, but some hotels are managed in Colombo. In plantation companies also, the plantation are the plantations in the hill country or the plantation, but management is done in Colombo. That is the organized structure of this business. Hotel in Sri Lanka and hotel and the plantation managed in Colombo. For that purpose, they have established separate management companies. For hotel management, they have hotel management. Lot of all these hotel companies have their hotel management company. Same with the plantations also, the plantation management company. Right? Why? There are some lot of estates belongs to one plantation. If we take the Balangoda plantation, there may be 30-40 tea estates, the factories. Likewise, then easy administration management company in the Colombo, the one town. Then in that cases, within 200,000 they can manage the plantation or the 200 limit or the 1% of the turnover. That is very genuine management companies. No any manipulation. That is a must. In such cases, we are not applying this route 2% or the 1%. The Commissioner General can justify. Say in one case, in my experience, we disallow applying this rate. Earlier we allow the 100,000, 1 million. The particular company says, no, for 1 million we can't manage the hotel. He said their involvement, the management company had some 5 accountants, 5 managers, and also their rent payment, everything they saw us. Then expenditure more than 1 million. They are really incurred more than 1 million for the management company. In such situation, he can justify. We are this part of management. Therefore, this expenditure is a must, and they incurred for their production of management fees. Then Commission can allow more than 1% or the 2 million. No any restriction. Commission can if the company can justify the expenditure management fees increase is very reasonable, then Commission can allowed more than 2 million or the 1% of the turnover. Only right. Other expenditure, income tax or any other prescribed levy. The income tax is paid after making the profit. Then that is income tax is not the business expenditure. Income tax comes if the company make a profit. Cost of any improvements. any expenditure of capital nature, any loss of capital incurred. That type of capital expenditure are not normally expenditure are not allowed. See, now if we take a business, the business, while they are doing business, if they have excess money, they deposit in banks, right? Then they receive the interest income. The same way, even proprietors, they put their excess money in the bank deposits, then they receive the interest. The same way, if they have excess money and they invest shares, they receive the dividend. Likewise, if they additional floor area, then they give in rent and they receive the rent income. Likewise, what the business is doing, the time to time, some capital the assets are disposed, right? Assets are disposed. Then they make a profits. The profit is normal book profit is computed based on the depreciation charge and the depreciation charge. Consider depreciation charge. We compute the cost of value considering the depreciation charge for accounts. But for a taxation, we compute the profit considering the capital allowances. We learn how to compute the allowances and all. Likewise, then if you get the normal accounts, the account says interest in other under the other income headings after the gross profit they show interest income, dividend income, and all. Then you have already looked. These are the separate. So these are not the business. For while they are doing business, that is their main core business, they can earn other income. We have to separate from the this set accounts. Then say in particular answer, interest income to be other income. This type of income, these are the income, but this income to be removed. I have given some example here. If you read this one, you can easily understand how I have made some adjustments. See, immediate I have allowed the depreciation, but Act says only allow the way the rate is specified in the Act. Depreciation allowance to be that basis we allow. But the business people claim in applying other rates. We only for neutralize, we add to it to the profit and we allow the according to the rates specified in the Act. Say sometimes this 200% is computed by the company, applied 50% of for machinery in the particular case, or the computer they have applied 50%. Then 200 comes. But we allow only the rate specified by the Act. Say we have earlier I saw these are the rates. We have given the rates. On that way we allow the rates. See, in some cases 100% are allowed. See, plant and machine equipment undertaking for first of sale, manufacture product for export. The government need to export more and more product, so they export. Then we allow the 100%. If one company purchases 100 million worth of machines, that means he can claim the 100 million as a expenditure. But normally they charge for 10% or the 15% for their accounting purpose, right? On that way we are adjusting. We will see the other example only for general understanding. We put this example. Right. Again, as I earlier explained, section 26 describe the disallowable expenditure. Because in some cases, here then there are in other previous slides also I described the disallowable, some disallowable expenses. There are some other disallowable expenditure. If you read the entire section 26, you can find many varieties of disallowable expenditure. Same way, only I explain very few allowable deductions of the section 25. Right. As I said, the domestic private is include the cost of traveling between the resident and place of business. Say, if you take a lawyer or the architect or some other business or even business person, if his business is in Colombo, he resided in Kiribati. If he go his all travel expenditure up to Colombo is not according to the Inland Act. We must very clearly understand for a purpose of business and in normal course of business, people are charging their all the expenditure for the business. That is, it is visible. When the owner of the business issues the car or the Peugeot Jeep and traveling, and when they paid the petrol bill, the diesel bill, they charge for their accounts. Once the profit is, all the private bills also deducted for the purpose of the profits. But cost here we must very clearly understand any private expenditure of traveling between the residence and the place of business is not a allowable deduction. Say, if the proprietor goes to the business place and he visits collect some amount from data, then he incur traveling expenditure, then this become the business expenditure. Then traveling expenditure we must clearly distinguish, identify. Here, unpaid salary and discontinuation by right. There are some cases, say, some expenditure incurred, but they are not paying it. Say, take interest. For a yearly basis, they are charging it, but they are not paying it. Then accrued. In such cases, if expenditure incurred and not paid within 3 years, right? Then that type of expenditure is disallowed again for the year in which the expenditure is charged. Take now 2016 is one company for a year of assessment for 12-13, they have charged interest of 100,000. It has not been paid so far. Then 3 years has been already gone. Then since it has not been paid, the tax department can adjust their tax accounts and demand him to pay additional tax and increase their profit. Why? He has in accrued basis he has charged, but he has not paid within 3 years. The same way, say he has incurred some other expenditure for the repairs, he put it as repairs expenditure but paid as a creditor, has not paid. Then if you have not paid within 3 years, that type of expenditure again disallowed and make adjustment for the fraud. Right. Right. Now entertainment expenses. Then we have the word entertainments. Normally we call entertainment expenses are not allowed. Right? Say, in some case of one businesses, they are entertaining their customers. They are annual sales conventions organized in the hotels. They are organizing dinners, dance for their employees. That means if the company has incurred expenditure for dinners, dance for the employee in the big hotel, or the dinners, dance organized in the hotel in Thailand, only for entertainers, for their employees, then in such situation, that entertainment expenditure is not allowed. Say the same way, when the customers come to the business place, and if the customers are served some shorties and the tea or the coffee, then that is although the nature of entertainments, but that type of entertainment is not taken into account as entertainment expenditure. Say in the year end or the beginning of the year, the company distributes calendars, diaries, then come it is a advertising or the not or the business promotion. These are the areas that we have to look into. Say if they, for a purpose of taxation, advertisement expenditure is not a allowable expenditure, right? Advertising. Then only we allow the 25% of the expenditure. Right. For expenditure, advertising also not allowable deduction, right? I will give you the full extract of the section 25 and 26 as Word document. You can read and all. Only here then I explain some important areas of the section 25 and 26. Advertising also the not allowable deduction. Only we allow the 25% of the expenditure, right? The reason is that if a expenditure is incurred for the advertisement, you know the benefit is accrued over the periods. Then in 1 year company can make more expenditure for the advertisement and charge into the accounts. But the next year not incurred so much. Then on that expenditure allowed restrict to 25%. The same way, then we learn now in some cases fixed assets are purchased. Say the motor vehicle are purchased on outright basis, but the company claim depreciation on say the 30%, but access only allow the 20% of allowance. Then we disallow the 30% of depreciation, allow 5% of allowances. But same way, some companies purchase assets on lease basis, then they are lease rentals, right? When we read the lease agreements, there are some periods involved. Some lease for 5 years, then means the 60-year month. Some lease are 48 months, the 4 years. Some lease agreement are 3 years, 36 months. Say, if company purchase the motor lorry on lease basis for 3 years, right? 3 years. 3 years. Say the value is 6 million. For a 6 million lorry, if he purchase in outright, only he can claim 20% of capital allowances. Then equal to 1.2 million. For a 6 million, 20% is 1.2 million. If he purchase in outright basis, he has to claim capital allowances 1.2 million for when he adjusts the profits. If he has purchased the same lorry for a 60 million on lease base for a 60 month, he paid only same, that means he is paying for a 1 million 100,000 per year. For if he lease the motor 60 million, not the 60 million, 6 million worth of lorry for a 60 month, that means he paid 100,000 per month. Then he per year he paid 1.2 million. Then no any question about that if we apply this one. But the disallowable section 26 says part of if any fixed assets purchased on lease basis and paid lease rental under financial lease, if he has paid his yearly lease more than 1/5 total lease rental, the excess to be disallowed. Say, if some case, if one lorry is per 6 million worth of lorry is purchased for 2.5 years, 30 months, that means then 1/5 is equal to only for a 1.2 million. If he has for a 30 installment, then he has to pay 200,000 per month and 2.4 million per year. Then only he has to allow 1.2 million, but other balance is not allowed. That means we will learn how to compute this 1/5 in other example. Then only for that means if any we have to first we have to compute total lease value, and if it has the lease for 48 months for 4 years, he has to multiply by the each installment by 48 or the 48 months. But we take the 1/5 of the total lease value and we take the two figures and we allow the 1/5 of the total lease value and excess is disallowed. The same rule is this restriction is always excess is computed based on the capital allowances rate applied for the assets. In case of plant and machinery, we allow the 33 1/3 for the capital allowances. But in such cases, 1/3 of the total lease payable is allowed, excess is disallowed. In such cases, we compute the total lease value and we compute the 1/3 of the total lease, and if we have paid more than the 1/3, more excess is disallowed. Right? Currently, we allowed 24% for the computer technology equipment. Then if it has bought with the lease basis, we allowed only for a 1/4 total lease value. In such cases, that means he must get the maximum benefit, he must lease for a 40. That means if he are leased for 30 years month or 24 months, disallowable parts comes. Any some transport, any reservoir provision. Right. Here we have to learn something for a provision. Say, take bad debts. In normal commercial accountancy, we know there are special provisions and the general provision. Right? In normal general, for the taxation, in computing business profit, we do not allow the general provision. But for bad debts, say in some cases, if the bad debts can be correctly identified, in such cases, the general provisions are allowed. In bad debts, general provisions are not allowed, special provisions are allowed. Right, we take a very little break and start it. Right, good. ආගෙන මොකක්ද? නම කොහෙද වැඩ කරන්නේ මේ? Cukup off. Off. Right. Yes, again, I little explain for the, there's some question for advertising. The advertising, the 1/4 of expenditure is disallowed. 75 is allowable. Right. Again, if the total expenditure is claimed as business expenditure, in the adjustment statement, we have disallowed the 25%. For example, if the company or the person incurred 100,000 of business advertising expenditure, we allow only for a 75,000, 25% is disallowed. Like us earlier we discussed, in case of bad debts, but general provisions are not allowed, special provisions are allowed. Special provisions special provision means if the person can give the name and address on a particular amount of the debtor, in such cases, special provisions are allowed. In case of banks, the special provisions are applied for the bad debts and the general provisions. We might see in another way, but in general business, the general provisions are not allowed. Special provisions are allowed in case of bad debts. Right, in practically, in normal way, normally, then I highlighted that if any fixed assets, capital allowances are granted. Say, in large business organizations, they are provided houses for their employees, sometimes furnished houses. Furnished houses include some furnitures, refrigerators, like lot of equipments and accessories, machineries. Then all are purchased under the name of business, but used in the houses or the used by the employees. In such cases, no capital allowances are allowed on such assets. And also in case of capital allowances, any motor vehicle used for traveling, then no capital allowances are allowed. Again, in case of capital allowance for the motor vehicle, if the motor vehicle is used for a business, then capital allowances are allowed. If the vehicle is used for traveling, no capital allowance is granted. But anyway, that is also depending on the nature of business. If we take a gem merchant, if we use for a motor car or the Pajero jeeps only for a transport of gems, in such cases, he used for the car for a transport of gems, then not for his private traveling. Even some cases, some businesses are providing motor cars for a rent. They are earning some rental income for giving motor cars. In such cases, the car is used for a business. Then it becomes the business and the use in the business. But any vehicle used in the company by its employees or the directors for private purpose, then such vehicle is not entitled for the claim for a capital allowances. Normally the students always identify cars, but in some cases, say there's a double cab is used only for traveling, then only we have to clearly identify the capital allowance is not allowed with any motor vehicle used for travel. We do not see the nature of vehicle, but we see the purpose of usage. Even if it is in generally we normally call, if it is even low used only for traveling, no capital allowance is allowed. But normally we know motor vehicles are used for transport, say, but in someone has purchased motor lorry for traveling, but no capital allowance is allowed. That is then earlier again I am supposed employees loans are not allowed as a deduction because that is not a business expenditure. Here again I am going to highlight always any outgoing no expenditure incurred for the production of income are allowed. Then question arises, what are the outgoings? Expense we clearly identify. If say the telephone bill, there is a expenditure. If you pay the salary bill or the telephone bill, we know the water bill, these are the expenditure. What are the outgoings? Say now, if we say take the motor vehicle, when it is used, this is depreciated. For that purpose, we are allowing allowances. If we take a petrol set, the fuel are evaporated. We can't physically, they are not depreciated, but that type of things are, we call in the assessed value is depreciating. That we normally call outgoings. Depreciating of some assets, that type of expenditures are we call outgoing. Expenses we know one the expenses incurred means if we are paid in cash, then expense incurred. In other outgoing we can't know any cash involved, but still it is incurred as a loss to the business. That is also we must learn. Again, then we highlighted 25% is allowed. That is always not existing. Before the 25 rule is applied, prior to that 50% is allowed, then 50% is disallowed. We must learn each and every one the tax laws are changing. In the next year of assessment, Minister proposed 50% of advertisement expenditures are allowed. Then rule is 50%. According to the existing law, the rule is 25%. In such cases, even advertising, the main things we must identify is in advertising even some capital expenditures are involved. In some cases, in some big hoardings we can see in such cases they have incurred that type of hoarding is a capital expenditure. If the hoarding is fixed, the time one pictures or the advertisement can be placed there. Then once it is become the capital expenditure, then if any capital expenditure is incurred in the heading of the advertisement, the fully disallowed and balance we consider as advertising and disallow the 25%. Right. As I said, there are a lot of business structures in the country. In Sri Lanka, now these days we can see a lot of foreign companies come to Sri Lanka and doing business. In such cases, in Sri Lanka, in some cases, Sri Lanka has a branch office. If we take a lot of construction companies in Sri Lanka, Chinese and Korean or Japanese, they have on Sri Lanka they have a branch office. Then branch office pay some expenditure amount to the as head office expenditure. By way of charging head expenditure more, they can reduce the profitability of the branch office. This is it was experienced by the tax department and the tax policy makers. Then they put a rule. Then now you can charge his head office expenditure as a business expenditure, but it has to be limited to the 10% of the profit of the non-resident company. Again, the head of expenditure related to non-resident company means the executive and general administration expenditure incurred by on behalf of the such company outside Sri Lanka and included. Then again, we have to very clearly explain the nature of the cost of employees and cost of travelling of employees or other person employed or managing the affairs of the office of the non-resident company outside Sri Lanka. And therefore, on that basis, 10% amount is considered. Expense on any premises outside Sri Lanka. Then, in such cases, no expenditure is allowed. Again, in some cases, if the non-resident company of the head office is in a position to justify their claim, their expenditure more than 10%, some 10%, and also there are some cost of traveling incurred for the management of their office. Then in such case, if we can justifiable, then Commissioner General can consider and more expenditure can be allowed. The branch office, the head office can justifiable that travelling expenditure connected to the branch office of the particular country. In such situation, Commissioner can consider and allowed more as the company claim. That is depend on the determination of the Commissioner General. Here again, under the M and O also I explained some expenditure. Here, especially in some cases, up to 2015 and 16, when we compute the employment income, up to 600,000 of the vehicle benefits were excluded upon the employment income. But in some cases, the motor vehicle benefit is only for a employee provided, say the less than the benefit of 600,000. In such cases, the company has to bear the expenditure. Though the employee get the benefit, company has to compensate for the expenditure. They have to increase their profitability. The restriction is if the benefit is not exceed 600,000, half of the benefits to be disallowed and added to the profit. In all other cases, the employment exceeds 600,000 per year, then 3/4 of the excess expenditure in any employees has to be added. So the same way, if a house benefit also, we will learn in the company taxation, not in the normal. Now here we are learning how to compare the business profit of the normal businesses. But when we discuss the corporate taxation, how to disallow the this profit employment, any benefit received through housing or the furnished house is up to some extent employment income is asset. In case of house benefit, if the employment income is exceed 1.8 million, only we asset 180,000. In all other cases 120,000. That rule is applied. But if the company has paid more than the 108,000 and the amount paid, half of that is disallowed and added to the first adjustment has to be made. That means the company has paid more and in the employee's hand the income is less, then half of the difference is added to the business profit. That adjustment is done for the motor vehicle benefits and also the housing benefit. Right? You can read through the computer, no? Can you read this one? This document for your computer? You can read it, no? All right. No. Now all other can see it, no? No. This one, no? No. All right. Now you can read your one. Right, good. Right. Right. Now if you read this one, then when we are studying subject of taxation, we have to give the more weight for the word specified in the Land Act. Each lot of words have been defined. The word trade, then now the word trade has been only section 3 says as a source of income, any profit from trade, business, profession or vocation, whatever the sort of period carried out or carried on. In such way, the section say any profit derived from the profit from trade or business. Then we must understand the trade, the business. The word trade has been defined in the section 217. The trade is include every trade and manufacture and every adventure concerning the nature of trade, right? Now we must learn what are the, say the include trade, then there means no lot of trade, textile trade, hardware trade, retail trade, wholesale trade, different ways. We can healthcare, it will be healthcare, horse racing, no, there are maybe different type of trades. Now, but here trade includes, not the means. If we put the trade means only limited to that area. Here we always put the includes. That means that is exhaustive. There have been lot of things including. There may be other things also. But we must definitely include every trade and manufacturer and every adventure concern in the nature of trade. Said right. For your understanding, in Sri Lanka, there was a lady called Rameswara. She had three daughters. She resided in Harsdorp. She had wanted to put her daughters admit to the St. Bridget convent in Alexandra Place. Then she had wanted to buy a land very close to the St. Bridget convent in the Column 7. Then one day she noticed in a paper some big land in Alexandra, very adjoining area of the St. Bridget convent is Column 7 in front of the town hall. The lady read the advertisement, approached the landowner, asked, right, I like to buy this land. They entered the agreement and she said, right, I'll buy this land, I'll pay some advance, I block out this land and selling and I'll pay the amount. And for that purpose, they entered the agreements. They initially paid 45,000 of advance, those days before more than 50-60 years ago, then land. And for that purpose even, he borrowed some loans and paid to the advance. She had not money to buy the whole land or the block of land. But only then she, on the consent of the landowner, she blocked out the land for 12 blocks and got the necessary municipal approvals and put some road. Then after that, she reserved one block for her and all other blocks were sold. And she made a huge profit. The particular officer of the tax department, she was a taxpayer, and she said on that business she made this profit is not casual and non-recurring nature, not the business adventure, as according to her view. And she declared the profit and did not pay the taxes. Then officer of the department come to the entire liability, put some value for the reserve for her, and accordingly they value the profits of the business and issue the assessment. Demanding some taxes, she said, no, your activity is adventure of nature of trade. Your main motive is make a profit and get a block of land. For that purpose, the officers prove that, justified, you have borrowed some loan even to pay the installment. For that purpose, you have made some effort to do the transaction, involvement of get the necessary approval from the municipalities, putting road, finding some the customers to sell the lands, and all other some activities of the business. And accordingly, in Sri Lankan courts decide that this is a business adventure, trade adventure, and ask her to pay taxes. But she did not agree with the Sri Lankan court decision, and she appealed it to the Privy Council. In Sri Lanka, you all must learn that is also in Sri Lanka before 71 up to 71 we were the colony of the, though we have got the independence from 48, still we have some colonial characteristics of this Sri Lanka. Our all the cases, in case of judiciary, highest hierarchy of the Privy Council of the United Kingdom. Then, if any person dissatisfied the Sri Lanka highest court of Supreme Court, she would have right to the appeal to the Privy Council of the British Emperor. In the British, again, if someone is read more in tax cases or in tax cases, there are a lot of Privy Council decided tax cases. In Sri Lanka, a lot of taxpayers did not agree with the Supreme Court decision. In even some cases, the tax department did not agree with the Supreme Court decision and appealed to the Privy Council. Privy Council was especially established by the British to hear appeals come from its colonies. For British, they had their own court hierarchy. In their High Court, a Court of Appeal, House of Lords, likewise, they had their court hierarchy. They have established very special court calling Privy Council to hear the appeals come from their colonies. Then this case also, Rameswaram versus Commissioner case also went to the Privy Council and case was heard, and Privy Council also decided that the motive of the taxpayer, their main motive is make a profit. Their dominant intention, the court considered what is the dominant intention of the trust, make a profit and get the block of land. On that basis, court decided that is the trade, the word trade, the profit, according to again, our charging section said profit from trade, business, professional or vocation. That profit is chargeable under the Income Tax Act, and accordingly said the word trade has been again defined the adventure of the nature and concern of the nature of trade. Here any adventure and concern in the nature of trade. That type of adventure and concern with the nature of trade. Says, and court especially consider what is the dominant intention of the person. The person is may get a block of selling the part of the lands and reserve one land for her own use. Then court decided that is that as a adventure and concern in the nature of trade. There are some other interesting cases in Sri Lanka like that. You can get some insight for the how to this type of words are defined by the courts. In the war time, in the bush, again there are some camp airports in the bush airport. In airports they have put some the hangars to keep the helicopters and the aeroplanes. Once the second war was over, put that airport land so acquired for the people of that area, right? Then when the war is over, people were asked to again come and get the ownership, and also they were given the option, if someone is willing to accept the hangars, even they were allowed to accept the hangars also. Hangars mean the the covers made from the hard cloths to protect the planes and all protect the planes from the enemies. Then the particular case, one gentleman accept the land with the hangers and he arranged a transaction to sell these hangers to export to India. They find some buyer from the India, he negotiated, but it was failed. Then again, he find some Pakistan fellow to export these hangers, and he bought some the adjoint person's hangers also, and export all hangers to Pakistan and made a huge profit according to the terms of those days. That the tax department, the fellow declared the profit and say, this is not the business, there was no any other option to me, this was happened, since my land was acquired by the armies and when they vacated, I got the land, the remaining items I sold it. I had not to make any business here. In that case, the court decided the person has not a dominant interest to make a profit. Only he had removed these hangers from his land. He has ordered to clear his land. For that purpose, if he has not go for that option, it will take some time to clear the land by the royal armies. Then, if he immediately clear the land, he went for that option. He accept the hangers and get the ownership of the land, and he selling that hangers and he make a profit. In that case, also went to the court, and the court decided in that case there is no any characteristic of every adventure and currency in nature of trade. Since he has not the option, he sold this land, and on that way, in that case, the court found that no any nature of concern with adventure of trades like that there are on that way. Other one, the business, the word business, again section 3a start from profit from trade, business, profession, no vocation. Then we have to write what is the business. Then we always in generally we are calling these two words. Even all the business, all the taxing act word use these two words. If you take the value added tax act, that use this word of trade and the business. Then the word of business also defined in the act. Here also there may be so many varieties of business, but include this, especially includes this one. Here this is also exhaustive definition. This is not the include means the word business is not mean. In some cases word the word means. Here trade includes, definition includes. Here if in some cases business means, then only particular for that business. Here includes, all other business also come, but including this one, give you any variety of business, but anyway you must include this under name business as a business. Here the business include any agricultural undertaking, the raising of horses, letting or leasing any premises, include any land by a company, and the forestry. Say, take the poultry farming, that must be a business, but especially undertake the raising of houses, agriculture undertaking. In some cases in our Inland Act define the word of agriculture undertaking also, then include the poultry farming also. Here with the business has been interpreted. Now again here we have very special things is come there, the letting or leasing of any premises, including any land by a company. Right. Now in taxation, we learn rent as a separate source. Then any building or the houses given on rent, then and that is chargeable for income tax in the recipient's hand. Then act given the way of computing the rent income. Normally, rent income is computed. We are for a gross rent we are deducting rates and we are deducting 25% repair allowance of weightage is incurred or not. On that way, for a gross rent we compute the net rent. Again, net rent in computed. For a gross rent, we deduct the rates paid and we get the amount, and from balance we deduct the 25% of repair allowances. We come with rent income. That's the way the computed method given in the Act for the compute the rent income. But say if it's an individual given house on rent basis, on that way he can compute the rent income, or even the partnership business, or even say the some charitable issue has extra building or the houses, they can give rent and they can earn rent income, and on that way they should compute the rent income. Right? But anyway, there are some companies, limited liability companies engaged in business. Their nature of business is letting premises for rent or lease. If you take a lot of properties have been developed in Sri Lanka. If you take the Unity Plaza, Liberty Plaza, and also the Royal in there is some, you know, in Rajagiri there are some big apartment developed in the Royal Plaza, or there are in Sri Lanka a lot of apartments are developed by the companies. Some are directly selling and they are making profit. Say all those companies also they are renting or leasing premises. If you take the Liberty Plaza, the company name is Colombo Land and Development Company Limited. If you take the Majestic Plaza, that is CT Development Private Limited. If you take the Unity Plaza, company name is Onali Holding Private PLC. These are limited liability companies. Still their nature of business is letting premises for a rent, and their gross income is coming from the rent or the lease income. In such cases, they are compute the business profit, right? They are compute the business profit. They are not compute the rent income. Their gross turnover become the gross rent. Normal business expenditure become the rate payment. For that purpose, they have employed several employees to look after the building. They are incurred repair expenditure. They are incurred in some cases they are provided security service, heating service. Lot of expenditure incurred by the owner of that building. In such cases only they are computing business profit. They compute the business profit, not the rent income. In such case, if a company letting business premises or the land for a rent or lease, then that become the trade, not the, then we assess the profit under section 3A of the Inland Revenue Act. Then we compute the business profit, not the rent income. If the individual has developed a building and collect rent income, then we compute the rent income. Only for a companies we compute the business profit. That's why all those companies use the Colombo Land and Development PLC is listed in the Colombo Exchange. There are so many shareholders, they are getting dividends. The company make a profit and they compute the trade profit. They are not, so in some years they made the loss. For in individual cases, they are not, they don't, in the individual they do not incur the loss of rent. There must be a fixed rent income and the lesser amount of expenditure rates and the repair allowances of 25%. Then in such cases, then we if a company letting land or the premises for a rent, then we treat as a business and we compute the profit from, we ascertain the profit under section 3A. That means profit from trade, business, provocation or vocation. Even lawyers, they are maintain chambers, then they come under the professionals. Say take doctors, they are running dispensaries, then they are paying rents, they have employed some employees, they purchase medicines, then cost of materials are involved. they are putting boards, then that type of things are also come under the section 3A. Section 3A, the business profit is computed not only for the trade and business, even professional or vocational also we are computing the profit from that type. Even doctor running a dispensary, then we compute the profit from his profession. Even chartered architect or the chartered accountant, he has party in the audit firms, then we compute the profit from his profession. Right? These are also the some important things to be noted. Again, we must learn the Sri Lanka was British colony up to 1948. The British colony had so many colonies all over the world. They all went to their all countries. They start plantation industries and all in Sri Lanka, especially they start the plantations. Their companies also establish here. Take the Unilever, Chiran tobacco, gas companies, plantation companies, they established here. And when they went to other countries, if the country's main source of income is mining, they start mining business. According to their resources, they start their available resources, they start their business. Then all the colonies were ruled by the British. Then they earn some money from their colonies and they spend for they made the expenditure of the colonies. But for the time being, British colony had wanted to raise the revenue through the colonies, and once the welfare expenditure citizens of the countries were gone increase, the British thought to collect revenue from their colonies. Then they start to taxing net for their colonies. For 1932, the British Emperor introduced the Income Tax Act for the Sri Lanka to collect income tax from the Sri Lanka. Only a general knowledge in 1932 in Colombo, Achille Square, they start the income tax department. Right? Likewise, then I want to highlight here that the British, they had their own taxing act. They introduced that act as a model act for all the colonies, only for making some small adjustments. If they went to the India also they act the same act, but they change some areas. The India sources are different. In Sri Lanka, they mainly focus on the tea, coconut, and rubber. But in India, they focus on different. If they went to the Malaysia and other countries, they also farming and all. There are different type of business. In the African countries, mainly they gem and all the gold. They mine in gold. They depend on the available resources. They develop the business. But in that way, the taxing act was literally changed. In Sri Lanka, they provide the tax for agriculture. For the African country, they put the, for example, the tax in the mining profits. The computation method were introduced accordingly. But there is a model ordinance. Then there is then when we income tax cases argue before the court, then we are highlighting the case of Indian one, Malaysian one, Hong Kong one, South Africa. Why we are highlighting that case as a persuasive matter? We are highlighting the Indian cases. Why? The model income tax ordinance were there. If the trade is before the court, then we are going to make reference in the Indian for Indian case where the profit has been defined. It goes like that. We are putting as a authority on the Indian or the case. Why? The same act was introduced for all the colonies of the British. Right. Now these are so very interesting special area of the taxation. Since we have identified the source of income as 3A, 3B, 3C, D, E, F, I, G, the different sources and different methods are applied for the compute the income for each source. Then today we learn the trade profit is computed based on the deduction and disallowable expenditure specified in section 25 and 26. Then the British had the other way. They are tax and scheduler system. Schedule A, B, C, D, E. Under Schedule D, they tax the business profit. Under Schedule A, they tax the rent income. Right? Then they were in. Then it is if someone has declared his rent income for a building, then tax authority can define in other. No, you have your income is not the rent. Your income is the business. Or the particular taxpayer declared as a business income, the tax authority can say no, your income is rent. Why? The income is computed in different method. The different figures come in some time. For an individual, if rent income is considered, we are allowing 25% allowances, but actually the income is expenditure is not incurred, but still we are allowing. But if the law is changed, any expenditure incurred for the repairs allowances, sometimes if the expenditure is not incurred, he has to pay more. He has to move more as his income as rent income. Likewise, the different methods are applied, different results come. Right? In this case, the City of London Royal and Property Company Limited versus Jones, and other one is the Fry versus Salisbury House Limited versus Limited. Fry is the name of the tax commissioner of the British. Here, the Jones is the tax commissioner's name, tax inspector. These are the company. Only for here, some words we extracted from some cases. In case called Mitchell versus Eden versus Ross, 40 TC means 40. The volume number is 40. TC means the test cases. 11 at 61. That means 40. The British test cases have in volume. That means a lot of books. In one volume there are more than 50-60 cases. Some volumes goes to 100 and 200 cases. This is a 40 TC at page 11 and 61 pages. In that case, the judges has expressed these words. See, before you can assess a profit tax, you must be sure that you have properly identified this source or other description according to the correct schedule. But as I said, in Sri Lanka we have the different source of business profit, rent income, interest, dividend and all. But British had the schedule, Schedule A, Schedule B, Schedule D. In our act is source, the method of computed profit is income is given. Then likewise, British also had given the method of profit is computed in each schedule. Then since different results come in computation method for the same income, the judge said, before you can assess profit tax, you must be sure that you have properly identified source or other description according to the correct schedule. But once you have done that, it is obligatory that it should be charged. if at all under that set, and still according to the rules that are there laid down of the assessment under it, it is necessary consequence of this conception that the source of profit in the different sectors are mutually exclusive. Say, if as I said, the profit from, say, if a company letting land or premises for a rent, we must compute the profit from trade in accordance with section 25 and 26. If I apply rates and for a gross rent of the company, gross rent and rates and the 25 allowance, difference results come. But if it is individual, but we have given the method of computing rent, gross rent you deduct the rates and the for a balance you deduct the balance the repair allowance. But if we have applied the section 25 and 26 rules, expenditure incurred for the production of rent, then different rules come. If we put advertisement in the paper, here is charging that also, no? If he has incurred more than 25% of the he has not incurred the repair expenditure, no, the different results comes. Then since the different results come, the first step is identify the correct source of income of the business or the company. That's why if we have in company taxation, we identify different sources. The main business activity of the company is make a profit. If they have additionally earned interest income or the dividend, we treat it as a separate source of income. Right? Since if we going to assess some person, but the first step is we must clearly identify the source of whether it is the rent income, it is a business income or the other source of income. That has been very clearly identified in this case of City London Royal Property Company Limited versus Jones, and these two cases were taken together by the court since the facts are similar. In the City of London case, they had a large building, they provided in for all the premises were given on rent and they earned the rent income. In addition to that, they provide some facilities for the tenants of the building. In some cases, since the climate is so cold, they need the heating. Since we are hot, we are getting the cooling. Likewise, some premises had to heat it. Some cleaning expenditure were done also by the company. That means the particular company provided some service, heating service, cleaning service, security services. Likewise, a lot of services were provided and they charge some amount for that one. Right? Then, the revenue authority, since you are a company, now this case has interpreted by their court according to their law. If this case in Sri Lanka, the court would have decided in different way. According to the applicable law, court has different. In the UK, the particular tax officer says, no, since you are a company, your rent income becomes the gross turnover and all other expenditure of the business. Accordingly, they prepare the business profit. But company appeal for the saying that no, our rent, we have the two source of income. One is the rent income that has to be assessed under Schedule A, and other profit from the providing services to be assessed under section schedule D. Then the profit from business. Why? The schedules are mutually exclusive. Where two different methods are given. On that way, the court said the tax departments are wrong. For rent income, the applying the rules related to the ascertain the rent income, and the business profit to be ascertained the business applying the schedule A on that way, right? That we stop for the day and we start on the next Saturday. They have provided. I have shared a lot of 4 Word documents and 2 PowerPoint documents. You are requested to read all these documents, get some insight, then you can easily understand, right? Okay, thank you, right, good night. Yeah, Thayaraj, no? Can you help me to? I don't know much knowledge about this technology.